I'm about to show you a graph that will absolutely shock you. The blue line represents Russia's GDP, while the black line represents Ukraine's. Now look at the red dotted line, which shows the exact moment the United States introduced sanctions on Russia. Ironically, sanctions that were designed to deter Russia have instead decimated the Ukrainian economy. Meanwhile, Russia's GDP figures are back to pre-war levels. But there is much more to this story, because sanctions against Russia have also completely changed the future of the US dollar. In 2001, 71% of global currency reserves were held in US dollar. By 2021, this percentage slid to 55%, and 12 months later, in 2022, the percentage has dropped to only 47%. The key takeaway here is that in the last year, the dollar share declined 10 times faster than the average in the past 2 decades. Simply put, the world is quickly de-dollarizing, which means they are shifting away from the US dollar and finding alternative currencies to trade in. This represents a real threat to the US financial system. 20 years ago, with 71% of global currency reserves held in US dollars, this gave the American government incredible leverage and power. But this rapid change we've witnessed has largely been self-inflicted. Through arrogance, greed, and bullying, the US government has given other countries no other option but to look for alternative currencies. Just listen to Florida Senator Marco Rubio describe the situation.
Today, Brazil, in our hemisphere, largest country in the Western Hemisphere south of us, cut a trade deal with China. They're going to, from now on, do trade in their own currencies, get right around the dollar. They're creating a secondary economy in the world, totally independent of the United States.
Did you notice the first thing Rubio said was, in our hemisphere? Almost like the United States has some type of ownership over the Western Hemisphere. This is part of the arrogance I was referring to earlier. Brazil is an independent country that has a close relationship with China, another independent country. But somehow, US politicians think we have the jurisdiction as a third party to dictate how Brazil and China conducts their business. Well, at least Rubio is realistic about what is going to happen next.
We won't have to talk about sanctions in 5 years because there'll be so many countries transacting in currencies other than the dollar that we won't have the ability to sanction them.
Let's go back to that graph I opened the video because it comes from Robin Brooks, the chief economist at the Institute of International Finance. Mr. Brooks recently asked 2 questions in relations to US sanctions on Russia. Number 1, have US sanctions meaningfully curtailed Russia's ability to wage war? And number 2, are US sanctions a deterrent to countries that may wage war in the future? The answer to both questions is no. The problem here is the US only sanctioned some of Russia's banks. All Putin had to do was reroute the existing funds into non-sanctioned banks, and the Russian economy began to recover, with Russia still exporting a tremendous amount of energy exports to close allies like China. Look at this graph, which shows the stress of Russia's financial conditions. Immediately following sanctions on February 23rd, 2022, Russia's banks and financial systems were hit with many difficult challenges. But as of April 27th, 2023, financial conditions in Russia have eased back to pre-war levels, a big plus for Russia's war economy. Robin Brooks goes on to share the only way sanctions would have worked is if the United States sanctioned all banks in Russia, which would essentially be a trade embargo. Of course, choosing this option certainly comes at a price. The European continent is in the middle of its largest energy crisis in over 50 years, and things won't improve for several more years. A United States-led trade embargo most certainly would have crushed Putin's ability to wage war against Ukraine, but it would have also crushed many European economies along with it. That, of course, was a risk the United States could never take, mainly because to this day, despite the US-EU sanctions against Russia, the European Union still depends on Russian gas. Look at this chart that shows us India has now become Europe's top fuel supplier. The black line in the center of the graph shows us India's oil imports from Russia, which were basically zero before the war started, and now are at over 2 million barrels a day. What this graph is showing us is that despite the EU sanctioning Russia, the EU is still buying Russian oil, just doing so at a premium and using India as a third party. The simple takeaway here is that US sanctions against Russia have not worked, but instead created a massive movement of countries around the world moving away from the US dollar. This is something that even US Treasury Secretary Janet Yellen admitted in an interview with CNN last month. There is a risk when we use financial sanctions that are linked to the role of the dollar that over time, it could undermine the hegemony of the dollar. We are starting to see this play out in real time. Just look at Saudi Arabia, one of the United States' chief economic partners, who aims to adopt an economic strategy independent of the US due to declining relations during the Biden administration. However, the biggest story by far is the emergence of BRICS, which one former White House economist predicts the dollar's dominance would face a threat unlike any other from a BRICS currency. A currency that would be backed by valuable commodities like gold, but more on that in a minute. You've probably heard of the BRICS network, consisting of Brazil, Russia, India, China, and South Africa. But here is something you probably don't know. There are 19 more nations who are eagerly awaiting to join the BRICS alliance, including Saudi Arabia, the UAE, Egypt, Iran, the world's fourth most populous nation, Indonesia, and get this, even the United States' own neighbor, Mexico. BRICS is preparing for their upcoming summit in Cape Town, South Africa this June, and we'll discuss how these new countries will formally enter into the BRICS alliance. Guys, this is huge news because just last month, the IMF reported the BRICS alliance will surpass the G7 network in economic growth. Bloomberg now predicts that BRICS will contribute 32.1% to global growth, while the G7 will contribute just 29.9%. But here is the crucial point that everybody needs to understand. The BRICS nations have the commodities, while the G7 controls the financial system. The G7 nations can't grow commodities. That's why the news of Saudi Arabia cutting ties with the US for economic independence is such big news. G7 nations depend on commodities like oil and gas from countries like Saudi Arabia and Russia. However, here is the most important thing. The BRICS network can create new currencies, especially when their value is linked to tangibles like gold, oil, minerals, and other natural resources. And personally, this is where I think the world is going. So let me tell you about today's sponsor, which is tied directly to the gold industry. And if you're an investor, you need to pay attention to what I'm about to show you, because the company I want to tell you about, US Gold Mining, represents one of the greatest opportunities in the gold space right now. The company is listed on the NASDAQ under the ticker USGO. And given the macro trends in our economy, I feel this could potentially be a great opportunity. This past Wednesday, the Fed raised interest rates again, which represents the 10th increase since last year, as the Fed is desperately trying to bring inflation down. Inflation that was caused due to the unprecedented amount of new dollars the Fed printed during COVID. Now check this out. Michael Hartnett, chief investment strategist at Bank of America, now projects the start of a bear market for the US dollar, predicting a 20% loss in the US dollar index. Hartnett cites widening deficits, America's banking crisis, and the rising trade in Chinese yuan as the three catalysts to the declining dollar. Just look at this article from Bloomberg last week, which highlights the Chinese yuan overtakes the dollar as China's most used cross-border currency. From the Middle East to South America and everywhere in between, China is convincing countries around the world to ditch the US dollar and trade in China's local currency instead. With the start of the dollar bear market, a potential winner here could be gold, and most specifically gold mining companies, which once again I feel presents a great opportunity for investors. Here's what I love about US Gold Mining. Number one, the company has a fortress balance sheet with a lot of cash. US Gold Mining just completed their IPO last month at $10 a share and is sitting on $17.4 million of cash post-IPO. This is huge, as very few junior mining companies have enough cash to last a few years. Number two, the company has a rock-solid management team in place with a proven track record. Tim Smith is the CEO of US Gold Mining and is a professional geologist with over 25 years of experience in mineral exploration and mining. He was previously the VP of exploration at Kaminak Gold and oversaw a project that was bought out by Goldcorp, the world's largest gold company. And this is exactly the same blueprint that Tim Smith is striving to achieve with US Gold Mining. Explore their site in Whistler, Alaska, mine more gold, increase shareholder value, and eventually have this company bought out by a major gold player. Right now, I believe US Gold Mining is undervalued, and let me break down some numbers to explain why. Currently, the market cap on US Gold Mining is around $113 million. If we subtract their cash position of $17 million, that leaves us with an enterprise value of $96 million. The company owns a project with 3 million ounces of indicated gold and 6.4 million ounces of inferred gold. After dividing $113 million by 9.4 million ounces of total equivalent gold across categories, we reach a price of $10.21 an ounce. The company will start drilling this summer, and if executed properly, the resources here would be valued closer to the median of $40 an ounce, which simply means there is a lot of room for US gold mining to grow. But let me break this down further and share 5 additional reasons why this could happen to US gold mining. Number 1, the company is listed on the NASDAQ, so there will be a lot of analysts that will start covering this stock. Remember, this company just went IPO a couple weeks ago and is still underrated, but with the world de-dollarizing, the potential for gold remains high. Number 2, just look at the gold market right now. Gold is comfortably above $2,000 an ounce, and with recession fears and a potential dollar bear market, gold will remain a great storage of value. Number 3, the company is a spin-off from Gold Mining Incorporated, and here is the amazing part. The parent company and executives own 84% of outstanding shares post-IPO. That means there is a limited amount of shares trading on the public market, and it also means that the management and the parent company are extremely bullish about the long-term potential of this company. Number 4, the mining site in Whistler, Alaska has over 9.4 million ounces of gold equivalent, making it one of the largest underdeveloped gold mines in the world. And finally, number 5, just like real estate, location is everything. And this project is in an ideal location just 105 miles northwest of Anchorage, Alaska. Right now, Alaska ranks number 2 worldwide in geological potential and number 4 for overall investment attractiveness. There is a state-led initiative to build the Future Access Road, including an investment of $8.5 million so far. I'll leave you with one final point, and that is around the world, central banks bought more gold on record last year, adding a whopping 1,136 tons of gold worth over $70 billion. For centuries, gold has always been a great investment and a great storage of value, and it's why I've always liked to have exposure to gold in my personal investment portfolio. But as with any investment, please do your own due diligence and your own research, and to help you with that, I'm going to drop some additional information about US gold mining in the description for you to review and consider below. Everyone, thank you so much for spending time with me here today on YouTube and discussing this important topic of sanctions, currencies, and the future of our financial system. As always, thank you for your incredible support, and I look forward to seeing you all in our next video soon.